Okay, so it looks like the majority of our registered attendees have logged in. Again, thank you guys for joining us today. My name is Brian Bonkowski. I'm the Managing Director of ROI Payments. We are going to be showing you a 25-minute what we're calling a bootcamp today in hopes of increasing your and improving your payments IQ. As far as the agenda for today, we'll be going into who's interested in payments in companies nowadays. That has changed, we would say, over the last 5 to 10 years. We'll go into that a little more in depth. Then we'll go into understanding the overall payments landscape as we see it at ROI. We'll then dive into the 5 major players as we see them at ROI, those being the schemes, the issuers, the acquirers, the processors, and lastly, but certainly not least, the technology vendors. We'll then go over a recent consolidation and acquisitions that have happened in the payments industry and how that might affect you as a merchant or a business. Then we'll look into the future as far as what we see is going to be coming down the pike from a 5-year perspective. So let's get into it. First, let's start with, I guess, my story and why I might be qualified to be giving this webinar. I worked for about 10 years in the enterprise software space, specifically with Microsoft Dynamics here in New York City. We focused on providing solutions for small to medium enterprise customers around reconciliation, back office systems, management consulting to help better automate and implement new technologies for companies. I left the Microsoft Dynamics industry and the technology consulting space about 3 years ago to work in the payments industry. And what I found when I made that transition was there was a whole bunch of muck in the middle of each of these payments. There's a customer, there's a merchant, but how that merchant actually gets the money from the customer is kind of what I call a black box. Luckily, my business partner, who's been in the payments industry since 2002, was kind enough to give me 2 hours of his time every morning between 8 a.m. and 10 a.m. To whiteboard exactly how the payments ecosystem works. And it is my goal with these webinars to help educate our clients on how the various players and logos, if you were, play together in the ecosystem, and try to give you a brained up and provide a decent foundation for how payments work in modern times. So who is ROI Payments? ROI is a tech consultancy headquartered in New York City, focused on helping businesses maneuver through their payments ecosystem and drive business growth. Why are we doing this bootcamp? Again, it is to regurgitate the information that I've been taking on over the last 3 years and try to summarize and provide you a basic foundation as to who the major players are, and take a stab at increasing your payments IQ. We're going to be using the term payments IQ throughout this presentation. I think you can understand what the foundation for that phrase is. Feel free to ask questions during the presentation. There should be a Ask Questions button. We're going to be holding all the questions until the end. If you have something that's terribly pressing, feel free to raise your hand, and we can probably address that between slides. Lastly, we'll be recording this webinar, so if you'd like to share it with your colleagues, family, friends, what have you, you'll be able to do that. Just contact ROI Payments. We'll be able to give you a link to download the webinar. Okay, so let's get into it. Who is interested in payments? In my experience in the last 3 years, it's a cross-section. At first, I thought it was going to be the finance people, the head, the chief financial officer, the controller. But what I found is typically technology people are playing more and more of a primary role in the decision-making process, as well as driving innovation. Further, when going after different markets, different geographies, oftentimes the sales and marketing folks are a part of that decision as well. So why? Why are we giving these boot camps? We're trying to empower our clients and the industry as a whole, from a merchant's perspective, to understand and to better facilitate decision making, to perhaps help facilitate the writing of an RFP, to help make more informed business decisions when choosing a technology partner, a banking partner, a processor, etc. So the end result, we're hoping to increase your payments IQ and to provide you, as it says there on the slide, a comprehensive understanding in understanding today's rapidly evolving payments environment. Okay, so let's try to understand the landscape. It's useful, I think it'll be useful for us to break this down into the most simplified and pared down transaction. That is a Visa transaction in the U.S. There are obviously other payment schemes, MasterCard, American Express, Discover, etc. There's also alternative payments in North America like PayPal, etc. We are not going to be diving into those in this seminar. The seminar is focusing on the most rudimentary and core transaction, that is a Visa transaction. Again, future boot camps will address these three-party and four-party networks, closed-loop systems, emerging markets, global payments, alternative payments, etc. But for the purposes of this seminar, we're trying to find a foundation, lay the groundwork, and in doing so, we as ROI have identified 5 major categories for the payments ecosystem. Those being schemes, issuers, acquirers, processors, and technology vendors. Now, please bear in mind, we are oversimplifying things on purpose. We are trying to set the foundation and the groundwork, and we'll go into more details in future seminars. Okay, let's review a typical credit card transaction and who the parties are. So on the left-hand side, you see the customer, or what we call a card holder. On the right-hand side, you see a business, otherwise known as a merchant. Looking at the attendee list, it looks like the majority of the people on this line are merchants across industries, as well as some consulting firms. So we're going to be addressing the majority of the presentation towards the merchant. So the merchant will have a bank associated with them. That is what we call an acquiring bank or an acquirer. A card holder will also have a bank associated with them, what we call an issuer or an issuing bank. You'll see schemes kind of hovering above the entire interaction in almost like a godlike setting. The schemes are setting the rules for the transaction. That basically think of it as like the Visa god setting all the rules and regulations on how things can be processed. They are not actually a bank. They are a scheme. The processor is below the schemes and does a lot of the heavy lifting in the transaction. They do all the authorizations, all the settlements. They do, think of them as basically being the paperwork and pushing the paperwork from an electronic standpoint. The technology in and around the issuer, acquirer, and processor is where things get very interesting. There are a number of different technology vendors out there and solution providers, and it's probably the most interesting, the strangest, and the most evolutionarily speaking, the most highly changed and agile of all these different parties. Then you see interchange popped up over there next to processor. Interchange are the fees associated with processing a transaction, and they're the fees that basically enable the entire process to happen. So now let's take a deep dive and look at each of the 5 categories as we as ROI see them. The schemes. The major schemes that you're probably familiar with are Visa and MasterCard. They provide the ground rules and the standards. More than anything, they're basically brands. In the end, they do not do any of the heavy lifting. They are the brands. Their goal is to increase their brand and brand awareness. This is probably one of the most critical and important slides of the deck. When people think of credit card processing, they say, oh, blame Visa, blame MasterCard. Blaming Visa and blaming MasterCard are interesting in idea, but they're not the end being who is going to be responsible for that transaction. They are the brand. In the United States, obviously there's Visa, MasterCard, American Express, Discover. Regionally, it's important to note that a number of various different types of schemes are evolving. These schemes are evolving both from a regulatory standpoint, for governments are mandating that the schemes be developed, i.e. like the Nets, a better way to pay. You see that logo there. Nets is a payment scheme specific to Singapore, and it's regulated by the Singaporean government. The Carte Bleue is a French payment scheme. A number of these emerging payment schemes are mostly pay with your bank type functionality, where the scheme is representing both the issuer and the acquirer, and basically moving funds from one to another. The United States is one of the only countries, if not the only country, where credit card is the primary source of payment mechanism and the primary scheme. In Europe, in the Far East, etc., these emerging payment schemes are important to understand and to support when going into those markets. Also interesting are the emerging payment schemes. As I'm sure the majority of the people on this call have heard of PayPal, but how does something like a Bitcoin fit into this? Alipay in China is an evolving payment scheme. So understanding where these schemes fit into the overall payment ecosystem is important, but again, it's more from a brand perspective. The schemes are not taking any risk in any of the transactions. So let's jump into the issuers. So the banks are the route to market for the schemes, and as such, they own the customer relationship. These are the guys who issue the plastic today and they get the cards out into the wild. Their goal is to get as many cards out there as possible. It's very important to note that they drive a lot of the industry. What you have in your wallet is incredibly imperative as to where you're going to be able to use that card and how are you going to be able to use that card. You'll note here at the bottom, the #1 issuer in the United States by volume is American Express. American Express, with its net 30 terms, tend to encourage large business customers and higher volumes, whereby the #1 market leader from a market share perspective and in terms of number of cards is actually Chase. Now that we've discussed the issuers, let's get into the flip side of that transaction and go to the acquirers. Acquirers are basically the banking partner for businesses. They take all the risk while enforcing the rules and regulations imposed by the government, by the schemes, by security, by PCI, etc. Think of acquirers as actually providing the paper. Equate this to the mortgage industry. It's very similar to the mortgage industry, whereby the people who write your mortgage are typically not the one who actually service it. Acquirers are those that underwrite merchants, and they hold all the risk in the transactions. They're incredibly critical to the payment scheme because, again, they hold the paper. In the U.S., typically acquirers work through what we call ISOs, or an ISO channel. An ISO is an independent sales organization. You'll see a super ISO there as well. Super ISOs have evolved to basically be an aggregator for a number of different ISOs. You'll notice on the bottom, Bank of America Merchant Services, otherwise known as BAMS, as well as First Data are noted. Bank of America Merchant Services is #1 in terms of U.S. card volume, but First Data is #1 in terms of number of merchants. The reason Bank of America is so prolific in going after the volume is because of their treasury relationship with a number of businesses, whereas First Data has focused a lot of their attention on the small to medium business market. Okay, now that we've covered the acquirers, let's go into the processors. Most merchants and customers don't actually know who the processors are or what they do. Well, what they do is virtually everything. They do almost all of the heavy lifting on the back end to process a payment. When a customer pays for an item at a store or online, and that merchant eventually gets paid for that item, that is handled by a processor. They make sure the money moves from point A to point B. It's also important to note that processors do not take any risk on the transaction. They do not have to be banks. You don't have to be a bank to be a processor, though there are a number of processors that have become banks. They're basically a highly specialized electronic paper pusher. They're a technology pusher. 90% of the industry is held by the top handful of processors listed here. It is very difficult to become a processor. It is a volume game. There are very few processors out there, and it's a highly evolved, a very, very standardized way of actually pushing the paperwork. If we go through the bullets on the screen, they provide authorization and settlement. They actually do the funds transfer and the money transfer. They provide statements. They do the interchange calculation. They actually find out if a transaction qualifies at one interchange rate over another. They provide a platform for dispute resolution and dispute management. And they provide equipment and software certification for gateways and hardwares. You'll note on the bottom there, First Data has a 48% U.S. market share from a processing perspective. What's interesting is First Data does all the payment processing for a number of the large banks out there, including Bank of America and Citi. First Data is a very significant piece in the payment processing world because they push more paperwork than anybody. Okay. Now let's get into the technology vendors. In terms of the payment ecosystem, this is what ROI sees as everything else. There are so many vendors to choose from. It is almost a headache trying to figure out what the best technology vendor is for a merchant. But this is also where merchants are making most of their decisions and interacting most often in the payments ecosystem. They're interacting primarily through hardware and software. The two major categories as defined by the technology vendors would probably be hardware and software. From a hardware perspective, you see in the upper left-hand side there, we've got Verifone and Ingenico. Verifone is the primary hardware and terminal manufacturer for North America. Ingenico is the primary terminal and hardware manufacturer for all other countries outside the U.S. From a software perspective, you see a number of logos there. Frankly, we had to pare this slide down quite a bit because there are so many. The primary software vendors from a gateway perspective would probably be CyberSource, owned by Visa. Braintree, you see there, is a very fast-growing software provider. Authorize.net, owned by CyberSource, also owned by Visa. From a small to medium business perspective, is probably one of the most ubiquitous gateway platforms out there. What's important to note is the space is huge and evolving. In a recent poll, in a recent poll that ROI did, we found over 150 relevant gateway platforms for our customers to choose from. Maneuvering through that minutia and trying to figure out what gateway platform is best for a merchant can be a very daunting task. It's interesting that this is also where the vast majority of the action is happening in the market. It used to be an organization would walk into their merchant bank, which would walk into their treasury bank, which would then issue them a merchant account, give them a credit card processing terminal, and then call it a day. As soon as e-commerce came around, very similar, they would walk into their bank or call their banking rep. They would set them up with their bank's proprietary payment gateway, set them up with a merchant account, and be on their way. What has happened is the banking end has become somewhat commoditized. Now merchants are addressing the technology first. They're doing this because this is where all the business rules are actually applied to a transaction. If they need fraud management, if they need to go international, if they need to rebill, recertification, validation, and verification of transactions and of individuals, that's what's actually driving the innovation. That's what is driving a number of the merchant decisions from a technology standpoint. And again, the actual banking and the acquiring of those transactions has become secondary in the decision-making process. But like every other industry, technology is leading the innovation and leading the drive for user adoption and growth. Okay, so what have we reviewed? We have categorize what we see as the 5 major categories in the ecosystem: the schemes, the issuers, the acquirers, the processors, and the technology vendors. A lot of people play in different categories, and it's important to note that a lot of a lot of companies are making acquisitions and partnering to provide these services in a growth capacity to make sure they stay relevant in their various categories. So a number of different companies are becoming issuers and acquirers themselves. A number of acquirers are processors. Processors and schemes are buying technology vendors. So the entire industry is first and foremost consolidating to help the larger organizations stay relevant in the payment scheme. We are working towards giving you bearings here. What we were trying to provide for you is a basic foundation for you to work upon and for you to make informed business decisions. We have provided you with a number of terms in this presentation. They're high-level terms, and in doing so, ROI has assembled what we're calling a payments dictionary, or a glossary of terms that we feel are relevant to the payments industry. That glossary will be available for download in the coming weeks. If you'd like a copy of the glossary, please feel free to reach out to us. So, what's next? What acquisitions and business changes in the environment have affected the existing payments ecosystem, and what's going to happen in the future? So some very interesting activity that has happened of late. Visa seems to be arming themselves for change. In 2011, they acquired a company called CyberSource. As mentioned previously, CyberSource owned Authorize.net. This is a drive for Visa to try to touch the actual transaction. Think of this similar to Microsoft getting into the hardware space. They were distancing themselves from the end customer or the end merchant and the end consumer. Now they're trying to dig themselves as deep into that transaction as possible. Another interesting acquisition is Vantiv. Vantiv used to be Fifth Third, but spun off Vantiv to be its own entity and its own brand to concentrate specifically on payment processing. Earlier this year, Vantiv acquired a company called Lidl. Lidl's primary user base was card-not-present large enterprise rebillers, large nonprofits, organizations that dealt predominantly in the e-commerce or online world, whereas Vantiv, prior to this, dealt almost exclusively in the card-present world. So this is Vantiv's drive to, again, stay relevant and to try to get into the e-commerce world. The third acquisition you see there is Ingenico. As mentioned before, Ingenico is the largest hardware manufacturer for retail terminals outside of the U.S. Very interestingly, earlier this year, they acquired an organization called Ogon. Ogon is an international global payment platform. It's a gateway that supports a number of different acquiring partners, a number of different processors around the world. Interestingly, Ingenico acquired them to, again, try to stay relevant, to try to get out of the card-present retail world to go into the online world. We wanted to throw another kind of curveball at you in noting that Groupon acquired an organization called Fee Fighters. Fee Fighters was it was and is a merchant processing, acquiring, selection partner. It was a way for merchant acquirers to compete for end merchants' business, and Groupon acquired them earlier this year to try to further ingrain themselves in the end merchants in the e-commerce environment. What this demonstrates is organizations are trying to make big moves into the payments space because it is a very, very fast-growing space. It's an industry that's in flux, and it's important to stay abreast as to what is happening and what changes are happening. So lessons learned. The industry is in flux. Things are changing. It's hard to predict what's going to happen, but as far as trying to predict, we will actually go on to the next slide, which is what we see is going to happen in the next 5 years. What are the missing logos from our presentation today? You see Apple. Apple holds 500 million credit cards. They could, in fact, become their own credit card network and their own scheme. What is going to happen with Apple? Microsoft obviously has a lot of eyeballs. What if Microsoft were to buy a payment processor or an acquirer or become a bank themselves? Verizon also involved with ISIS. ISIS is a conglomeration of Verizon as well as other telco carriers in combination with Visa and MasterCard to try to interject the carriers into the payment processing chain. You see Facebook there, Facebook credits. Are Facebook credits going to be able to be used for actual e-commerce in the future? Obviously, there's a lot of eyeballs on Facebook, so Facebook as a payment scheme is quite possible. AT&T along with Verizon, very similar, getting telcos into the space. Bitcoin, I'm confident a number of you have probably had some water cooler talks around what Bitcoin is and how they might play into your merchant goals and your goals to acquire new customers and take new payments. What's interesting is Amazon coins. Amazon coins is its own payment mechanism. Amazon is trying to provide their own, and in the future, their own closed loop payments network. But we'll go into what a closed loop payments network is and a number of other hot topics as far as what's going on in the payments mechanism and ecosystem in future webinars. In the interest of time, I'm going to go to questions and see if we have any questions here. I think we're good. So if any of you guys have any follow-up questions, comments, or concerns, feel free to contact me directly. I'm at Brian at ROI Payments or at 212-812-4177, extension 2134. I'd like to thank everybody for your time today, and I hope you have a great day. Actually, we do have one question. Does Intuit Payment Network involve in this at all? I would say absolutely. Intuit's Payments Network is has evolved as being a network provided that it's integrated into QuickBooks. Intuit made a very smart play in establishing their own payment network within the payments ecosystem. Intuit actually is a payment aggregator. We mentioned on well, you saw on a slide previously, Square as well as Stripe as what we call PSP or payment service providers. So Intuit has provided a very smart means by which to enable payment processing from within QuickBooks as well as direct bank transfers. So yeah, absolutely. Intuit does play a role in this for organizations who are running QuickBooks. If one organization is running QuickBooks and another organization is running QuickBooks and they're both in the Intuit payment network, it's very simple to remit payment from one organization to another. So hopefully that answers your question. Are there any other questions? Very good. Well, again, thank you guys for your time, and I look forward to hopefully speaking with all of you on our next webinar, which will happen next Wednesday, also at 1 p.m. Eastern. Have a good day.